All right, hello, and welcome back to another video. So today we're going to be going over the broad market overview, which is where we take a look at a lot of the major ETFs, kind of see how different sectors, different narratives are trading, and we always start with the highest level, which is of course the SPY, SPX. So SPX has been very interesting to me. If we go back up to the weekly chart, we're seeing a lot of compression. If we just take this off here, we're seeing a lot of compression. We obviously had a huge, sell down about 20% during the tariff drama, and then immediately V recovered into kind of this slowly momentum losing extreme bull market. And now if we look at the Bollinger Band's width here, which is the width of the Bollinger Band. So here it was huge because we had a huge sell down, and then here it got the biggest it was because it, V recovered. We're at a very small or low value, and usually when there's a low value, that means that there's compression, there's complacency, there's a general market sentiment of we're fine right here. And usually that will resolve to either a violent move to the upside or a violent move to the downside. Now, usually if you just kind of look back, if the S&P is ever at highs and it's very low like this, especially after a multi-month, almost year-long bull market, honestly, usually this ends up resulting in some sort of move down. Now, of course, there's always context. Like here, the Federal Reserve was, raising interest rates. The general broader economy was looking to be coming into a contraction phase after the major bull run after COVID. So there was macro backdrop for that. But at the same time, like, the chart doesn't lie. Like, the data is the data. And I'm not saying that the S&P has to go down, but I am saying that there's a good chance that it, might. I would say about a 50-50 at least. Like, at the very least, a 50-50. And then here we had a very similar thing. We had compression up here for not very long, and then the tariff drama, of course, happened, and the market sold off. Now, eventually, we just V-recovered it, so it's an amazing buy opportunity. It almost always is. Even if you just bought here, yes, you were down for, a year, 20%, but, 3 years out, 4 years out, you're up 40%, So it's all about the long-term game with that, or at least, if you're going to try to time the market, at least get better entries and focus on the market when it's doing this and not this. But we can go back and look at some other instances. Like here was another compression phase, and then it went down. Here was a compression phase that, more so, that one's kind of more pronounced. Yeah, right here, another compression phase, broke up a little bit. This is a very minor one. I think what's more important is the fact that this is like a very violent expansion followed by a very sharp decline or a slow decline in compression or slow increase in compression. My apologies. So there's a difference between something like this, which is more of like a pendulum swinging one way and then swinging the other, versus something like this where it's just steady, 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 steady. And then we have one violent thing to shake it up. There's some violence here and then some violence here. But yeah, so that's kind of where I'm looking at. I'm looking at the S&P being about a 50-50 on whether or not it's going to go down. To me, if it was going to go down, I would probably estimate that it would probably retest these highs down here. So we could see around a 10% drop. That could last a week. It could be a couple months of chop. I have no idea. I'm not shorting anything. I'm more so using that as context when I downstream from the S&P. When I look for positions, I'm kind of filtering out certain positions. And we'll kind of get to that as we go through the rest of these charts. So now looking at the Qs. So kind of same thing. We're having, the same story here, compression, So essentially what this is showing is that a lot of the big companies, big companies, big tech in the US are going through a compression phase. They're just kind of finding out if this is a fair value or not, and waiting to move higher or not. IWM is really interesting. So IWM has been moving up while the Qs have been moving down. So if we look at IWM over the QQQs, we can see that they're actually kind of forming a little bit of a bottom of here. Obviously, usually the NASDAQ and the S&P massively outperform the IWM ETF, which if you don't know, IWM is basically like kind of, well, let's look it up. What is IWM? What is IWM? Isn't it like the top 2,000 companies? Yeah, or not top 2,000, but it's like exposure to small public U.S. companies, access to 2,000 small cap domestic stocks in a single fund. So basically, it's like average, sized U.S. companies. In the future, I'd like to look a little bit more deep into this and have more information. But essentially, yeah, that's kind of what's happening. So essentially, what's happening here is that people are starting to rotate into other names. People are starting to rotate into companies that aren't the Nvidias or the Apples. They're rotating into more kind of staples plays, and we'll see that as we go through. Like, if we check out XLP, which is the big one people have been talking about, this is consumer staples. So this is companies like, I don't exactly know what companies are entirely in this ETF, but I believe companies like, Nvidia, or sorry, excuse me, not Nvidia, like Walmart or, just a lot of general companies that are things that people buy, like things that people go to and visit, have been doing really well. And I think that this is kind of, I think one of the reasons this is happening is because it's a narrative play. It's, people rotating to stuff that's kind of boring. Like we've been seeing a lot of that. People are kind of, rotating out of tech. We're kind of seeing that, via, if we just check out like, Palantir, which has been a big narrative, Palantir is getting sold off. We check out Robinhood. Robinhood's been getting sold off. We check out Duolingo. Like these are all stocks that everyone on Twitter has always been talking about, and they're just absolutely nosediving. And obviously some of these companies aren't super big, like, Duolingo isn't huge, but I mean, you look at Nvidia and it's, going sideways, and you look at Microsoft, it's just absolutely nosedived. Like it's at the lowest PE ratio that it's been at since the 2022 lows. Like this is pretty oversold. I would not personally buy Microsoft, but that's just because of how my investing works and my trading strategies. I simply just don't touch this stock. But so I think that's a big narrative reason why this is happening, is because people just want to rotate into other stuff. And then I also think this is a bit of an inflation play. My hunch is that there's a lot more value that's going to be accruing for these companies going forward. Now let's move on to silver. So silver had a pretty blow-offy top back in mid-January. And, not really much to say here. We go on the logarithmic chart. If you caught this trade, if you caught it from here, my system would have said to buy here, but I just didn't, because silver to me is just, it's hard to like time, because it moves up very aggressively once every decade, basically. Like it's not the kind of asset you have to check once a week for, or once a month for years. And it would have been nice to catch this, but if you caught this, I hope you're taking a lot of profit up here, because I don't know where this goes. It most likely goes, and just kind of chops around and eventually maybe finds its way to 50, and then, I could imagine it finding a bottom around 40. Like maybe it can go all the way back down here. We'll see. I don't know about that. But yeah, I feel like silver play, if you caught silver, if you caught gold, amazing. Silver is probably a stronger sell. Gold is actually looking quite decent here. If we go to the 4-hour, put on the line charts, it's a little more obvious. It's making higher highs and higher lows. Like obviously this is still just sideways and still just chop. Like it's going to be a while before this thing potentially touches another all-time high. But to be fair, like this is quite strong. This isn't like silver. If you look at silver, it had an aggressive move down, and then it didn't even do a 50% retracement. Like it didn't even go up, and retest this kind of midpoint of the fall. But gold immediately did. And now it's putting in, kind of like this little, ascending triangle type of move. I don't think this is going to break out, or if it does, it's probably going to come back down first. I really don't know if this will break up, but it'll be very interesting to watch, because I feel like the fact that gold is holding up so well to me shows that there's actually a decent chance it could go up higher. Like it could at least go back to the all-time high. It might just go up to the all-time high and then come back down and then just hop sideways. But I think this really shows how much demand there is for gold. Like, yes, there was a huge wave of speculation and retail traders, not retailer traders. Retail traders are piling in and whatnot. And that's why we see, we saw a blow off top. That's why we saw silver have a blow off top. But in the grand scheme of things, I mean, looking at this chart, this does not look like, I'm on logarithmic. I'm not even on logarithmic. We go on logarithmic, like this does not look like a blow off top. If we look at, a different gold blow off top, like, where was another one? Well, this was the one. I guess that wasn't blow offy too. But yeah, anyways, I don't know. To me, I feel like it's just showing that there's at least still strong demand for gold. Like the daily is still, that's still holding above the 20-week moving average, or 20-day moving average, excuse me. So very strong, very strong. We'll move on. Triple Qs, same thing as the regular Qs, I believe. So not much to say there. I added that on accident, honestly. That shouldn't be there. IBIT, Bitcoin. All right, let's look at it. So probably a better chart. I like to look at the ETF charts just because I want people to be aware of what kind of ETFs are out there that they can invest in. But to be honest, this is probably better on the actual Bitcoin chart. So if we go to logarithmic view, Bitcoin is, we had a breakdown week last week. We did touch briefly. The low was, I think, exactly 60,000 basically. If we look at the low in the top left, the low was $59,930 on Bitstamp. Okay, well, that makes sense. No one trades on Bitstamp. So, so we had an expansion. We had expansion to the downside. Had the opportunity to go up. It looked like it might have wanted to go touch the 20-week moving average. Wait, 20-week. Yeah, 20-week, sorry. I get confused with this being the 200-week down there. So 200-week moving average, we almost went and touched it, but, bulls just couldn't move it up. Immediately sold off. It's quite insane how aggressive the sell-off was, actually. Like, I remember price was like right here at 82, 80, and I had buy orders at like 72, and I was like, I wonder if it's going to get hit. And then it hit it, and then just immediately teleported to like 63. And I bought more, luckily. So I'm pretty happy with how much I have. I kind of wish I bought more. I just don't have a ton of cash to put into something like this right now, just where my money is in terms of my strategy. But overall, I feel like if you do think Bitcoin is worth something, I feel like this is actually a really good time to start accumulating, because if you look at the 200-week moving average, which this indicator I use is just the 200-week moving average, so it's the average price of this point, but 200 weeks back. If you look at it, and the color is just basically is price above the moving average or below it. So if it's red, it's below it. If it's green, it's above it. That's all it's saying. It's just something that I like for visual purposes. Custom little indicator I made. If you look, though, Bitcoin does not really trade below the 200-week moving average very much. Historically, it barely went down there. 2018 bear market, it basically didn't. 2022, we overshot it, and I feel like this is kind of what we should expect. Like, I'm not banking on it overshooting the moving average, and there's a couple reasons why. But I also not discounting it in. Like, I'm not saying, oh, it's not going to happen, so I'm just going to buy and fully deploy here, and then it just goes to 46. Like, there's a world where this thing really does, like, get close to testing. Like, I don't think it would go all the way back here to test these, these levels, even though they are, like, really strong levels. I'm not saying it can go down there, or, like, I'm not saying it will, but, like, if it starts to go down there, like, I could see it bouncing up and, from here, kind of front-running those people that are waiting for those levels. My point is just, before I get off topic too much, I'm not, like, banking on, oh, I want to buy Bitcoin, but I'm going to buy it under the 200-week moving average. I'm more so just like, okay, I know the 200-week moving average for Bitcoin, just like the SPY, is a really big deal. Like, for the S&P since, 08, since the, global financial crisis, the 200-week moving average has been support. It's been, like, the last line of defense. And so for Bitcoin, it's kind of the same. Now, eventually, that may change. But But for me, it's like, to me, this is like just a really good time to be buying, because even if you look at the monthly, like, we're basically at support. Like, we're testing new lows. We're at the bottom of the monthly Bollinger Bands, which, if you also look too, like, we've almost never been there. The last time we were there was June of 2022, which we did go lower, but like, if you really think about it, we didn't go that much lower. We went 20%, 25% lower. So to me, I feel like the bottom, for me, I really did think the bottom was going to be about 60. And it's not because we hit 60, but because I thought that 60 felt like a nice, good number, where it's like the previous all-time high. It was the high we put in before we went sideways and based for, like, put in this big base for 6 to 8 months. Excuse me, I'm recovering from a cold. But I thought that it was going to chop around. I thought it was going to go up and then come back down and then, bottom somewhere like in here and then, go up. Excuse me. I didn't expect it to just go down and immediately go to 60. So for me, that kind of makes me feel like there's a pretty good chance that we're going to overshoot this. But like I'm saying, I'm accumulating now. My average buy is like a little bit above this price that we're at right now, I think. Or maybe it's actually right at this price. So that's where I'm at with that. All right, big boy XLE. Energy sector ETF. All right, this has been a very exciting play for me because I have been watching this for quite a long time, kind of on or off, and finally this thing gave me a really good setup. So people have been talking about it on X a lot. So there's a big narrative because, obviously with AI, people are wanting to buy stocks that are kind of, or assets that are downstream of that. So like, hey, if you can't just buy the AI companies like Google or Nvidia, if that's not really the play anymore, then the play is to buy the bottlenecks, buy what things are going to be affected, what things are going to be making more profit or more revenue because AI is real, AI is here. And so one of the things about that is all these energy stocks, all these stocks that, electricity is going to get more expensive, power is going to get more expensive. And so the idea is that a lot of these companies that are producing, whether it's straight up producing electricity or producing oil or in gasoline, they're going to start making more money because their products are just in aggregate, on average, in more demand. And so to me, that's why it's very clear that this is breaking out. We had if we go on the monthly, this thing had a monthly contraction phase starting in January of 2024. And then lasting all the way till now. This is this was the breakout candle. Now this is like, it's official. Like, if you aren't packed your bags, it's probably a little too late. This thing probably will keep going for a while, but I have a feeling it'll slow down a little bit here. I could be wrong, but this thing just doesn't have a ton of trading history on the monthly, so there's not much for me to judge it by. The only thing I feel like I can really correctly judge it by is this move here, post-COVID. So to me, that's what I would be looking at. And what's interesting to me about this is that this thing actually had its strongest moves of 66% in, 4 months, in 2022. In January 2022, that move started. You know what happened in January 2022? The S&P topped. And I think we can all understand probably why that was happening is because inflation, energy was picking up, energy prices were going up. Gasoline was like doubling in some parts of the country. So to me, it's very interesting. It just feels like there really is at least this narrative of inflation coming back, and just things having to get more expensive because of, mostly AI, like this increase in productivity. So, well, usually increases in productivity do result in deflation because you need less money to create the same value. But I think with AI, we're in this phase of like trying to get to that point of productivity. And so we're doing a lot of spending, a lot of CapEx, and just throwing money at the problem until it gets what we want. All right, big boy, the Van Eck SMH Semiconductor ETF. This bad boy just does not stop. He just does not stop. This is the monthly, so a little more misleading. But since the April lows, it's just gone. It's crazy. It's up, even not even at the low, but just from here, it's up 115%. Very crazy. Very similar thing. You can see here that we had a big expansion and then we had a decent contraction. But what's so interesting is when you compare it to this, we're having this is stronger. So this is really stronger. So to me, this is still a good play until proven otherwise. It's just strength. It's been strong since the GFC. It's basically never gone below its 200-week moving average. So to me, this is an ETF that I would still be focusing on. I don't think there's any reason not to be focusing on it. I wouldn't necessarily be buying it at these prices because, it can just go down 30%, for any reason. So I'd be careful with that. But, next time that it goes down on some sort of dip, unless you're dollar cost averaging, then feel free to buy here. But if it goes down on its next dip, I feel like this is one of those ones you'd want to load up on or find some sort of setup. Hey, if it breaks this line, hey, we'll just go in, and that would have worked out really good for you. But also that would have worked out really good for you on anything, given the whole market was moving up at that time. But yeah, so not much to say about SMH. It's very, very impressive. It really shows that companies like Micron and SanDisk, just these companies that are building they're taking the raw materials and combining them and building memory and building disk space. I don't want that. These companies that are bottlenecks for AI, for the data center expansions, they are all going to be doing well. They already are doing well. TLT. All right, this is a fun one. Everyone's got their own opinion on this. So if you don't know what TLT is a ETF that has a lot of different 20-year and 30-year different types of treasury bonds. I believe it's only U.S. bonds, which would make sense to me. I don't actually know that, though. I'll have to look in that. But let's just assume for safety, because it makes most sense, that this is all U.S. bonds. So if you don't know, bonds, the yield is inverse to the value of the bond. So, if the average, bond yield is, 5%, and then the government issues a, new 7% bond, the 5% bonds immediately become less valuable, which makes sense because everyone's like, well, why would I buy, from someone else a 5% bond when I could buy one from the government that's yielding 7%? It doesn't make sense. So so you'd have to reflect that in the value of the bond, which means that the value of the 5% bond would go down. So essentially, bond values go down when yields go up, because existing bonds become less valuable. And in the inverse, it is true too. So because if bond prices go up when yields go down, because that means that existing bonds are more valuable. Also, it doesn't just mean that, but yeah, that's the way that I would explain it very simply. So to me, there's some people talking about this is, contracted very heavily since the 2022 low. Yields kind of, were going down around this time, so the bond values went up. And then they crashed once they started raising rates. Because just a lot of newly minted debt was just at lower and lower rates. There is a setup on the actual, chart that's very strong compression. If it can get up to here, it probably could move. But to me, there's just no macro reason. This is an ETF, and just not even just an ETF, but it is a market and a narrative that I would never recommend focusing on, because I feel like it is way too much energy unless you just find it interesting. The only reason why I'm looking at TLT is because I find it interesting. I find the bond market very interesting. But I would never recommend buying this personally. I don't understand how this thing could move, because if this thing moves up, it basically means that the long end 20-year and 30-year bond yields are going to start coming down, which I don't really see happening, because the Federal Reserve is lowering short-term interest rates, which means that, banks are going to be able to lend at lower interest rates, which is going to cause more money to be available, which is going to cause inflation, or at the very least, going to cause inflation expectations, which is a big component of what determines long end rates. If you expect inflation to be 2%, you're going to probably demand a 3%, 20-year yield. But if inflation's 10%, you're going to expect a lot more than 3. Like, that's just kind of how it is. So I wouldn't touch this. I would look at it every once in a while, but yeah. All right, the Dow Jones. It's going up. It's going up. It's another one of those ETFs that kind of has more like, well-known kind of smaller, not smaller companies, but more established companies. It's going up. XLF, State Street Financial Sector ETF. I don't actually know what this is. I've never seen it. I've just added a list of top ETFs to my list, and then I'm just kind of going through them. Pretty average. Reminds me a lot of IWM, I guess, in a way. Pretty choppy. I don't really have much to say on this. I'll probably have to, keep this on the list and keep looking at it. State Street Technology Sector ETF. Another one, meh. I mean, it's going up. All right, IGV, Expanded Tech Software. I mean, this literally looks like Microsoft. That's the big thing right now, is tech has been just selling the hell off. I mean, what the hell is this? That's like the largest volume candle ever. I don't know what the hell happened there. I don't know if that's real. That's crazy. Yeah, I mean, this thing is just... It's back at 2022 levels, which is crazy. And what is the components? Let's see. Components of IGV ETF. Let's do that. Let's look that up. iShares Expanded Tech Software ETF. So what is in here? Key facts, portfolio characteristics, number of holdings, 114. Holdings: Microsoft, Palantir, Oracle, CRM, Palo Alto Networks, AppLovin, Intuit, Adobe. I mean, these are all companies that are, CrowdStrike might be doing okay. CRWD. It's doing okay, but you look at Adobe. I mean, Adobe's been fucking getting just absolutely demolished. I mean, everyone hates this fucking company. I hate this company. I stopped using their software because it's so fucking expensive. They lock you into a stupid contract. You look at companies like HubSpot. I mean, this thing is just absolutely ate shit. I mean, it's crazy. You look at ServiceNow. I mean, this is crazy. This is so insane. I just remember looking at the stock and being like, wow, this thing looks pretty good back here. And, now it's just went up and then just absolutely fucking... I mean, this is capitulation. This is classic capitulation. You know what this reminds me of? This reminds me of UNH. It's not exactly the same, but it reminds me of this. It's just straight down. And this thing did not recover well. This is, it's not going down more. This thing probably eventually trades higher, but, what's the point in staying in this, And that's kind of how I feel about these. Adobe, I feel like there's a case to be made that, if it finds support here at the 200 month, and then it just kind of goes up and up, and then, maybe some good changes in the business happen. I don't know, maybe AI saves Adobe and they're able to take over the design industry again, like how Google is taking over search with AI. Then maybe they could put in new highs. But to me, it's just the risk to reward of not even the risk. The downside is, there's a pretty big downside, but it's not even the downside that's annoying to me. It's this company is just shit. I don't want to be stuck in this company. That's just my personal opinion. But yeah, so I mean, it makes sense that that IGV, makes sense that this basically just looks like the Microsoft chart. I mean, what's the weighting? 10%. 10% of this is Microsoft, and then another less than 10% is Palantir. And Palantir looks just terrible. So, yeah. By the way, I think Michael Burry shorted here. It was either here or here. He just immediately got in and was like, "Hey, I'm shorting this fucking company," and now he's up 30%. All right, gold miners ETF surprisingly doing pretty well. Looks very much just like gold. Not much to say there. XLP we talked about. Very, very good chart. It not only is breaking on the weekly, but it's breaking out on the monthly. Very, very strong candle. If this monthly can close like this, I mean, we're looking at 100 within a couple months, honestly. This thing could absolutely go wild, which is so funny because these companies are just, yeah, I mean, I don't even know what's in this ETF. I'll have to look into that. XLU, more utilities. This thing's doing pretty decent. So, yeah, not much to say there. All right, so that's it through the ETFs. I want to just look through some of the top ETFs here on Yahoo Finance. So this is something I recently picked up, is being able to see the top ETFs by volume. So you can see stuff like, for example, SOX-S, which is the top ETF traded right now, which is the daily semiconductors ETF, but short and 3x long, or 3x short. It's 3x short semiconductors. This thing is fucking ripping down. Like, so basically, you know, we look at how good, where is it? SMH. How good SMH is doing? Well, this thing is doing the opposite. Oh, whoops. Wrong chart. This thing's doing the opposite, and it's doing it 3 times levered. So this thing is just fucking nosediving. I don't know why people would be in this. I don't know why. You can see here there's just so much volume. I don't really understand why, but people are putting a bunch of focus on it. You know, it's got $325 million in volume in the last. I'm assuming this is 24-hour data, but it's just doing terrible. All right, ZSL. So what's ZSL? Pro shares, ultra short silver. Yeah. So what's interesting is that a lot of the. Well, this is all. Oh, this isn't USD volume. Okay. That was something I was annoyed about, was the fact that this is like contract volume, I think. So if we look at, yeah, this is contract volume, I think. Yeah, it's contract volume. All right, whatever. Anyways, a lot of people are trying to get into these assets that are shorting, so yeah. But this is a cool thing to look at. I think it's cool to look at like kind of what people are focusing on. I can't even see this whole chart, but whatever. But yeah, so I think the big focus of this week is watching XLE, which, where is it? Oh, there it is. XLE, to me, this could still go quite a lot further. This is not only a weekly B-bands contraction, but a monthly. So to me, this is just an amazing play, and I'm going to continue to sit in this. This is my main player right now. I'm going to continue to sit in this for the foreseeable future and go from there. I hope you guys found something interesting in this. I hope you guys learned something, and I will catch you guys next week with another ETF weekly market overview.